Today is Friday. It's a few minutes before 8 o'clock a.m. And that little shimmy they had at the end of the day yesterday, they've got some follow through. In the pre market, they're at 548.33 currently. There is a data release, will this be a core personal consumption expenditures price index, CPE or something like that, that comes out at 8:30, may have some kind of effect on the market. And I want to show you something on the large, we've looked at weekly and monthly charts, but I want to show you the daily, just maybe a slight explanation of what they're doing. I mean, like I've said several times, they could do anything and they could do whatever they want. But for timing, it's a good time for them to roll over and go down, but it doesn't have to be really easy. They don't have to make it easy, and it doesn't have to be just all one fell swoop. So what are they doing? Well, they're climbing up. We've got a lot of levels. Some of them are relatively close together, like within a dollar, like 547.37, 546.34. And if there's big moves, what I usually like to do is step back and be a spectator, not tempt fate. But if they're just going to climb higher on low volume, in fact, let's just take a look at the daily chart before I finish that sentence. By climbing higher on low volume, I mean this. So here's a daily chart. Last several days been well below the 90 period moving average, so 90-day moving average in this case. And if I saw this, like say, like on a 15-minute chart where you had just everything's kind of normal, moving averages can be all over the place, but you had this kind of relatively large breakup candle, and they were kind of stair stepping down inside this candle. And amount of time it took them to get to the bottom of this, with no closes, say no 15-minute candle closes below the low of this, then that's generally going to be an area for a few reasons for a bounce higher. And this whole consolidation move would be out of the top of this. In other words, there's where support would be. Then after a certain amount of time, the goal would be to get them up here somewhere. There's going to be some type of move. And so they're doing this in the daily chart. It's just that they're so far extended, like on the monthly and the weekly, and the timing is right on those charts for pullback. That what are they doing here on the daily chart? Do they have any business to go back up here and test these highs and even try to break above them? Well, they can. It's just interesting. Like if things start to feel off, I said this in the email yesterday to my pre-subscribers, that if things just don't feel right or feel off, and that's just sort of more of a gut feeling that you have after looking at the market every day for many years, that I just find it safer to step back and watch what's going to happen. And when the dust settles, and then I'll make trades when I can understand a more predictable market, or I can feel like I'm trading in a more predictable market. But anyway, back to the full day, and we'll talk about what to expect. So just be aware of unusual price action and trade appropriately. Typically a Friday, especially leading into the summer, is slow, and low volume typically means price moves sideways to higher. I mean, that's kind of the path of least resistance, but it's just we're such at a strange and important time right now that it would not be surprising for them to do something out of the ordinary. At any point, this is the way I like to look at things. One of the ways I like to look at things. At any point, price has three directions to go. It can go sideways, it can go higher, it can go lower. And if you've determined with high probability that the next move, the next, say, 10, 15 minutes, an hour, or whatever, is a certain direction, and things are starting to go that way, and all of a sudden, out of the blue, it does exactly the opposite, it's something else is going on. And, because if you can be 80% correct in your predictions for short-term moves, which I usually am, and something else happens and they do exactly the opposite, I don't want to guess that, okay, I'll just, instead of buying, I'm going to go short, because I don't know. I mean, it could just be a big whipsaw and they could fake you out and do a lot of other things. So anyway, I'm only saying this because here we are, Friday, end of the week, end of the month, and end of the quarter, and they haven't done anything worth mentioning all week long. So will today be the day, or are they just going to continue to grind sideways to higher, and then next week we'll have something? We'll find out. Come back to this chart after the market closes and look at the aftermath. It's now Saturday morning, 9:20 a.m. We're looking at Friday's price action. I had to travel yesterday afternoon, wasn't able to make a video, got in pretty late. And so here we are. I got a couple good trades in, and did mention this morning, or at least I said it in the email, that I had to head out, had a conference call to get ready for at 9 o'clock, and it should have been wrapped up around 9:45 or 10 o'clock or so, but it went till quarter after. So I was watching all this. I guess all you really care about is what would have happened at the levels. So let me make some adjustments. Let me explain what I'm going to do. So after 9:45, keep this here. So 9:45, where was price? Price was in this general area, so they were between these two levels. So the assumption is well, it's obvious at this point. If they come up into this level, I want to adjust this with 5 cent buffer on the, down toward price. If they come down, I'm going to adjust this 5 cents up. And that goes for every level above and below. I'll do that, and we'll come back and talk about the trades that were possible. Now, if you look at these levels, as prices coming into them, it's just a little bit quicker, closer, and easier for them to be triggered. And when we get down here, this is a good example of front runners, and this is why I like to apply this little bit of a buffer. It didn't work here, but let's just talk about them in turn. So after 945, they came up into this level. I'm watching this. I kind of kept an eye on things. Did not get any of these trades or these two trades at the very beginning, but you would have gone short here. Now, they had a little bit of a pullback. So think about what happened. They opened here. They spiked up through the level, came down, closed. And so, they got maybe 3 ES points or so in the money before they took off. And I did say that, if strange things happens or if things feel off during the market, it's good to kind of step back. But the likelihood that they're going to just bust right through this kind of important 550 area is pretty low. So it wasn't too surprising that this created a zone, but I watched them here, watched them consolidate around this level. So, the rules are, if you're playing by the rules and you're just looking at these levels, you would have sold short here, you would have sold short here because it was out of the money, and your average entry level was around here, gave you a base hit pretty quickly. I just watched all this, I finished with my meeting, kind of paid more attention, and then I got this trade here. They came down into the adjusted level of 547.42 because you don't do anything here the first time it hits because it's before 945. That's just the way I like to do it, and it's a good example of why. Because what if you'd gone short right here? Well, that would have been bad. You would have been out of the money, and it would have been too much for you to possibly withstand, at least playing by the rules, because I didn't want to necessarily sell here, sell 2 contracts here, sell 2 more here, sell 2 more here. I mean, that's just not good, at least the way I like to play it. But anyway, going long here gave me a base hit. Going long here gave me a base hit. They came up really close here. So here's that example of front runners. The low was 545.78. And yeah, that's too close for comfort. That to me is a near miss. Did not take it when they came back into it. And by toward the end of the day, this was after 3:30. So I'm not interested in this. But I basically looking at this after the fact because I was traveling during this time and I was able to get these 2 trades in here and here. And then kept an eye on a few things. And then the rest of the time I was just kind of looking at it from my phone as I was away from my computer for several hours. But anyway, no recording of this of today. But just to give you the idea of the thought process here, there were 1, 2, 3, 4. And if you wanted to take this other trade down here, you could have. I wouldn't have, honestly, because to me, this was the trade. They gave the trade here. And if they come back into it, I don't know if it's going to work again or they're going to fall down. So that would be at least 3 trades if you were playing by the rules. And I took 2 of them. So anyway, that was the day. And I want to show you the daily chart because we looked at it this morning or late Friday morning. I want to show you how the day ended and what happened and like what we can kind of expect. Because yeah, there was a little bit more volume, a little bit more movement. Not exactly the kind of fireworks I'd like to see for a bigger move to happen, but things are happening. I guess you can make the case that they woke up a little bit today. So here's the daily chart. So we said the bottom of this breakup candle here. So this kind of area right here would act as support, and the typical move would be out of this area. So think about where they were. They opened up here this morning, or I keep saying this morning, Friday morning, and they did go test the highs right up here. But no, the daily close was way down here. So they're still within this area. And the timing, well, like I said several times before, it's more important in my opinion on the weekly and the monthly chart. But there's really nothing unusual about this. This could play out higher. In fact, let's just look at the weekly chart and see how that looks. What do they give us? On very low volume still, they gave us a little doji candle. So yeah, probably going to be some type of pullback just based on that alone. But I just really would like to see more institutional participation. And I will say something about that later, about something I saw on one of my other analysis charts. And then while we're at it, let's just look at the monthly charts. Monthly chart here. So remember the level I put here, the volume on, I guess it was Thursday, was right below this level, so that they've added a little bit just in one day. 888 million shares traded this month total, but they didn't get a whole lot more in that one last day. I didn't think they would, so it's still very low volume, and they're climbing up here. So it's possible for them to go higher at this point. I mean, nothing bearish about this chart. It's just, I keep saying the timing is the important thing here. So let's give it some more time, another week or so. And of course, we have 4th of July Independence Day holiday next week, and I took a look, and there's several somewhat important announcements happening, and that could be some type of catalyst, but we'll see when we get to it next week. We'll go over the tracking log and see how the trades on Friday translated into profits. But first, I just like to show these levels as satisfied. Short trade here, short trade here. This zone, holding onto this for a pullback in the other direction, worked. So 2 base hits. Third one is here. Fourth one is here. To me, that's the trade. I'm not counting it, although it did work a little bit later. So to me, this is done, but not going to be counted as a playing by the rules, because there's a near miss scenario. It came within a certain amount and pulled up within a certain amount of time. And like I said, that's the trade. So I'll just get rid of this level here. And then this one is non-factor, because when it hit this level, it was after 330. And yes, they did pull up pretty good, but it's just not worth the risk, in my opinion. So, I mean, really, there was, if you think about these levels that were put on the board long before the market opened. I put the email out at 8:15 this morning, thereabouts, because I had to wrap up and head into the office. I missed that 8:30 data release, which maybe sparked the market a little bit. The point is, these levels were on the board a long time before the market opened, over an hour before the market opened, and then look how they reacted later in the day. So it's pretty cool to see this happen, where you could have, if you really wanted to be riskier, I guess, you could have traded all these and had maybe 5 or 6 trades, each one with a base hit. But these 4 were legitimate and by the rules. So strictly adhering to the rules, you could have had 16 ES points. In order of the trades taken, they started out here at level in column F, went up, came all the way back down, the one here at E, down to D, and not triggered because of the near miss, and not triggered because of the time of the day after 3:30. So there's all the levels that were hit and how it happened. I took 2 of the trades. I'm not really explain everything. It was pretty straightforward when I showed it to you. So not a bad way to end the week, especially considering that there could have been a lot more fireworks today. They really didn't wake up. But we'll just take whatever the market gives us on Monday, find new levels to trade, and in the back of our mind, just be aware that if they wake up and start moving, we'll be prepared to not get caught in some kind of trap door situation. Still maintain that sooner than later, they're going to go down. But I don't know why I keep making these predictions, because I don't know why I keep saying this long-term stuff, because during the day, it really doesn't matter. I just think it's healthy to have in the back of your mind what could be happening. They're kind of just sort of on the flat line at this point. In a possible rollover, they might climb a little higher before it happens, but here I go again. I don't know. I just find it interesting to think about that. I mean, it's been a long time since I've traded options, but this is the kind of mindset I would have. I'd be like, okay, I'm going to start buying put options at some point for, put the expiration way out and ride it out, because, I'm usually pretty right about these moves and the trend changes, especially when it comes to timing. But I've just had better luck trading intraday futures when, with a higher probability, I can predict short-term moves, as evidenced by this entire YouTube channel if you're watching these videos. So hope you found this interesting. Thank you for following along. Thank you for letting me show you my trades, and for subscribing and all that. We will see you next week. Have a great weekend.